Trading is risky. Do your own research. Never risk more than you can afford to lose. All right. And with that, let's see if we can transition over to our charts and take a look at where things begin. For starters here, this halving is coming up, long awaited, right? It happens every 4 years. And well, it's getting to be that time. So we found a pretty cool countdown clock that I can share with you here. So let's start with that so we can get a bearing on when this is going to happen, depending on your time zone. It's supposed to happen somewhere between Friday and Saturday. Pretty much in the overnight hours. So that is coming very, very quickly. This is a pretty cool clock that I found on Coin Wars, if you're interested in checking that out. So now let's look over to the charts, right? Because this is what really matters. We can speculate all we want about what's going to happen after the halving, but what we need to know is what's happening now and what's going to happen in the near term. Okay, so obviously here's the halving date coming up here, rapidly approaching. This has happened many times before. You can also see we have a nice trend precognition long signal on the daily time frame, and price is indeed moving up after a pullback yesterday to retest or test support at the lowest of lows that we've had recently, down at 59K. And so far, that support has held, which is good to see. Now, what happens to the upside? We have resistance up here. And so we'll illustrate that very quickly by looking at fire charts to see where the liquidity is. And we will, from there, try and analyze further and show some history of what has happened historically. Now, what I like in this chart right here, this is fire charts. This is a 3-year history of the order book. This is the order flow down here with our bin CVD. And what I like here is that in the past few days, since price has come back down to retest this support level, we have seen bid ladders come in from 50K up. Now, we've had some liquidity here in this 58 to 60K range for quite some time. And it seems to be strengthening again. And this depth here is good to see. Now, I've shared with you guys many times the fact that I think that before we can have a real move to the upside, we need to see a higher concentration of bid liquidity coming into the near range. And you can see historically that price tends to move away from those bright spots, but it takes a significant amount of concentrated liquidity in those areas, right? In this instance, it was 110 million. Most recently, we had 96 million stacked on top of another 93 million and some depth below that. So this was like $250 million, stacked right here. And that was enough to build a foundation for this to go up. So we're missing that piece, that component right here. Of course, $100 million block could show up at any, unannounced any minute. So I'm always watching for that and looking here on fire charts to see how liquidity moves relative to to the price action, right? So I'm going to zoom in a little bit here to give us some more perspective here, as we can see running into resistance right now at this as we approach 63K and a mix of, I'd like to see more buy pressure, more buy volume here. Let's take it in closer here and see what's happening here on a smaller time frame. Again, a mix, but as you can see, this resistance is stair stepping up, and that's kind of a positive sign here. So take it down to the daily and see if this has changed any. So yeah, some buying. As you can see, the dip's getting bought here. Whales, the purple class, has been the most influential. Now these brown whales, a little bit of a fake out here from these guys lately. So you have to be conscious of the possibility of that. Not seeing real robust well buying right now. It's kind of like buy the dip and sell the rip. So a little cautious about that as we watch things continue to develop. So let's now look at the candle chart. Go back to the candle chart and look at some historical data on halvings, because I think it's widely believed and understood that the macro perspective for Bitcoin is quite strong, and that we can anticipate and potentially going for new all-time highs sometime after the halving, right? Whether that happens in the next 3 months, 6 months, or takes up to a year remains to be seen. But in light of the recent downside volatility, maybe the catalyst was the recent escalation in geopolitical tension in the Middle East. That obviously sent some people, scared a lot of people, right? And so I've been telling you for months and months and months that having or no having corrections happen on a regular basis, and that Bitcoin is overdue for a correction in the 20 to 40% range. And the reason for that is because we had these straight rips that were uncontested. Okay. We had literally from the 50 to 52K range, went up here and never retested this. Same thing happened when we broke out of this 45K level, right? Never went back and retested. So reasonable to think that that could happen. And in terms of where those prior areas of consolidation land in the grand scheme of things, let me just clean this up a little bit. I'm going to take out the trend precognition. We understand what's happening there, right? In the grand scheme of things, we can see that these areas, right? They're ripe for a retest. It's never happened. Now we're seeing some strength here, and this is good because hey, it's conceivable that we do just go up from here. We have our newest all-time high. 73, almost 73, what was it? 73, 794, almost 73, 800. And the problem is for the upside, we've had a hard time breaking above this 69K level, which of course was the prior all-time high for it's the 2021 top. And we broke out, but wicked down each on almost every candle. So that was a sign of weakness. And I had shared that with you guys at the time. We saw it break down, went back and retested. But again, weakness with all these wicks below. I just never had confidence in that level holding. We've been looking to validate an RS flip, a resistance support flip, and it's never happened. And so now we look at what other ranges that could happen in. Could it happen above the 65K level? It looked like it might, but we had this breakdown over the weekend. So now is that consolidation range? Is the RS flip here at 59K? Or are we going to go back and retest this? Now, we have this halving coming up, right, in less than 2 days at this point. And so while the macro outlook is bullish, that sometime post-halving, we could see price get back up above here and go after a new all-time high. Yes, that's a reasonable assumption. And history shows us that that's a reasonable assumption. And I'll show you that there. But how high can we go? Where's the ceiling right now? Where's the strong resistance? And I showed you on fire charts what's happening overhead. And we're going to look at where the confluence is between the technicals here and what's on fire charts, right? We have a death cross about to happen between the 21-day and 50-day moving average. Yes, it's a lagging indicator, so maybe it's mostly played out, but don't rule out the possibility of more downside, even this close to the halving, or maybe, hey, maybe we're going to pump into the halving and then have that correction when it punishes the most people up here. So real quickly, let's look at what 20, 30, and 40% corrections would look like. And I want to show you why those are important numbers. Okay. So our all-time high is now at this 73, almost 800 level, 20%. Well, we're real close to it. Okay. We have greater than 19% on what we tested here this week. Not quite 20%. Is that close enough to the pin? Well, it might be, unless, of course, we're going to go for a 30% move, which would get us down into this 50 to 52K range, area of prior consolidation that never got retested. That's a viable target, as is this 40% range. Okay. And this is the area of the strongest consolidation, the longest consolidation, in my opinion. And I've said this many times before, this would be the strongest foundation for the big move up. Because this is the longest area of consolidation. So those are potential downside targets that can happen. Now, if price moves up and we clear this level without this correction, and we're now up in this 80K range, then these targets would move, right? These targets would scale up, right? Let's say we were up here around 80K. I think. Let me zoom the chart so I can see that. Let's say we were up here in this 80K range, and now those targets change on you, right? So we'll keep in tune to that and see what's happening in terms of liquidity. Again, we look at these levels of technical resistance and technical support, and look to see where we have confluence on the charts. And as you can see, resistance overhead, um, right overhead, we have this at 64K. But getting above that 69K level, this is where things really get tougher because we have so much concentrated up here. Now, what's positive is we have more bid liquidity coming into this range right here, which is now getting closer to the volume that we have up here. And what we want to see is this get even brighter and brighter and brighter, and then have a shot, a better shot, in my opinion, of moving up. Now, what also is positive here, I guess, if you're a bull, is the fact that we're not seeing much sentiment at this point to go sub 50K. Okay, so those 50 to 52K targets still viable, but not a lot of concentrated liquidity there. So, in my opinion, there's not a ton of sentiment for that yet. And there's even less sentiment to go into that 44, 45K range, right? You can see it's very, very thin here, a few $1,000,000. So, looking to see this brighten up here to have a real shot at going up here. The depth is positive to see. Now back to the halving chart, and let's look at this. Is where the history lesson comes in. Okay, let's go back in time. Halvings happen every 4 years, right? So let's take a look and see what has happened historically. This is kind of my lifetime channel. We can debate over whether the lines are the same as yours or not. Doesn't really matter. Lines are subjective. You do what works for you. This is what works for me. And as you can see, if we dated all the way back to 2012, the first halving, there was a significant 40% correction leading up to that halving, and after the halving, well after the halving, into the bull market, an even bigger one. Right now, I think that the numbers here have scaled back a bit since the early days. That includes the upside potential. Right, these were massive moves. Thousands of percent to go from this this low at was like $1, right? Up to that market, that was that was like a 51,000% increase. So I don't think you're going to see increases like that these days anymore. But we do expect to see more upside. As you can see, second halving, we did have a bull market extension of the bull trend after that. But look what happened just before it. There was a 30% correction before it, and there was a 30% correction just after it. And so, this took a little time to develop. Halving was in July. We saw this dip happen in August, and through that bull market that followed, we also saw another dip. Right, it happened a couple of times. So we can look at these and realize that yes, even in a bull run, we can have a deep correction. 33% this time, right? So when these dips happen, when these corrections happen, if you're overextended and over leveraged, you're going to get punished hard. But if you're responsible about your trades and you are in tune to what's happening, then you can position yourself for opportunities to maybe take profit along the way and recycle some of those profits into some of these dip buying opportunities, or just preserve powder for those opportunities when they present themselves, right? The problem is you never know when it's coming, right? It could come right after, it might be several months after, and it might happen several times along the way. And that's why I personally, a strategy that I employ is to take profits along the way so that I can then recycle those profits when the opportunities present themselves, if they should do so. So moving forward into, let's see, this one happened a little closer to the pin, right? This was July 2016. And then that, price chopped a little bit. And then by August, we saw things break down, and then a nice quick recovery. So the recoveries aren't always V-shaped, right? So keep that in mind as well. This one happened to be a 40% correction on the way to the 2017 top, rather. And then we move on to the next one. Look at this, just before and just after the halving. And this seems akin to what we might be seeing now, right? There was a big dump. Let's see, this was actually from that high down to the low. This is like exactly what we've seen right now this week. Okay, just days before the halving, a big a 20% correction, and then what happened after the halving? price jumped because the market goes, oh, it's the halving, we're going to make a bunch of money. And then what happened? It puked again, another 12, 13%. And so people get really freaked out by this. And you could say that was 12%, 15%, whatever it was. It was another correction, and it shook people out before this next move, right? And then a little dip below, and up we go again. So the moral of the story here is that, well, there's two of them. One is that we can and will have these corrections along the way, and that there's just no straight lines. Look at this consolidation, a little bit of little consolidation to the downside, and then boom, up again. So I would not be surprised if we at all if we were to see something similar play out. And here we go, up to the top of the market, right? When we went into new all-time high territory, right? We had another 30% correction along the way. And so these things can and will happen. They often do. So I would not be surprised at all to see us pump into the halving, potentially. I won't be surprised at all if we retest any of these levels at any point in time, right? And right now they line up with that 20%, 30%, 40% target that we talked about in terms of ranges. But let's say that we continue to rally here off of this dip and pump our way into the halving, and then perhaps we consolidate up in this range a little bit more and try and get above this 2021 level of 69K. Totally conceivable that happens. But then we could see another breakdown. The old adage, May go away. Entirely possible that we see an ugly May that brings prices back down before we cruise back up and have a chance to go after new all-time highs. To the upside, of course, how high can we go? Well, your guess is as good as mine. I will tell you that, in my opinion, the real price discovery happens if we get up back into this channel here, right? We looked at that lifetime channel. I'll zoom out for you one more time so you can see it. And I think that's where the real price discovery will happen. Now, we could possibly never make it back in there and still be doing just fine. Look at this. We could be up here and, if we're up on this trend line, it's conceivable that we just chop our way up here, and that still gets you into six-figure Bitcoin over time. So this would be the glass ceiling for me. This is a hard ceiling right now because we have this resistance here, and we've seen the liquidity to prove it. There's not much above 80K at the moment. This is where the frontier of price discovery is. And my gosh, if we could make it up even to this halfway point, which is I think a reasonable bet somewhere down the road. Don't necessarily think that happens over the next year, but over time, you really get into some potentially astronomical numbers. I'm not even going to allow myself to speculate on that at this point. But nonetheless, I just want you guys to be aware that we can have a correction at any point in time, and to be prepared for that. Don't get sucked into the up-only narrative. It's not a real thing. With that, I'm going to wrap it, guys. I hope that this has been insightful for you. And I do want you to stay in tune to what's happening. Well, we always, we're watching the order book to see how things are going to develop. And I think that's important that we continue to do that. If you like the content, please do me a favor, smash all the buttons, share a comment with me, and let's continue to grow this channel. I appreciate the support that you guys have been showing me, and I really, really enjoy the comments. I engage with each and every one of them. So please keep those coming, guys. Thanks again. This is exciting stuff, right? We got big stuff happening here in the market, and I'm looking forward to seeing how things evolve here over the next few days, and really through the next quarter of the year. Going to be an exciting time, and glad to have you guys with me. Make it a great day, and as always, trade safe, my friends.